Hello everybody, Jackson here with the Wealth Squad. Today we'll be talking about the 5 worst performing stocks in the stock market right now. And I'm talking about $10 billion or more in market cap. That's my cutoff. So these companies are the worst performing this year so far, over $10 billion in market cap. So first off, we're starting with Affirm. Affirm is like a buy now, pay later type program, right? You want to buy shoes at the mall, they might have an Affirm sticker or something like a Shopify store, right? You buy something and you could pay for it now, or you could pay in 4 quarterly or monthly payments, right? It could be $100, or you could pay $30 a month for 4 months and buy that way. So they make a little profit on the side. Anyways, let's check. The high of 180, 176, low of 36. So let's check year to date. See exactly how much this baby is down. So we see around 63% in 46 days, right? 33 bars, uh, which basically means 33 trading days, right? So I put this purple zone as like a load up zone because you can see in the past it was a good time to buy, right? Back in May and July. Now, we broke below it. So what do I have to do? Bring this down, or just maybe it doesn't make any sense anymore just because the stock has fallen that much. We're in new territory where the stock has not seen these prices ever. And you can see that the past 4 earnings reports have been disappointing, right? So not too good for Affirm. However, I remember in the 60s, 160s, they're talking, people on Twitter were talking about, how do you not own Affirm yet? Look at this cash flowing machine. Well, price what you pay matters, right? And obviously we're seeing that right now. Could be a good company long term, who knows? But right now it is getting beaten down like there's no tomorrow. Next, let's look at the next holding. That will be Roblox. Roblox has very high potential, right? It's a metaverse type stock. This is Kathy's been buying this up. Kathy Wood with ARK Innovation ETF, ARKK. She's been buying this up like crazy, right? It's a metaverse play. Anyways, you can see from year to date, we are down from 100, 102, down to 49, so 51%. You can see the year chart where we had a max of 140. Now we are in the 40s. So tough time for Roblox. Down, $90 since November, and now the stock is, 49.50. Definitely a metaverse play, so look into this if you want, a growth type, speculation type stock. So this is a solid one, but look at these earnings reports, more and more disappointments. Maybe Roblox has fallen in tough times, but who knows what Roblox could be in the future, right? So who knows? Look into Roblox as well. Next, we're going with Roku. Roku was a darling tech stock for a while. It was a core position of every tech investor's portfolio, every growth investor. It hasn't worked out too good for them. But look at this company, right? It's a solid company. They had one bad earnings report, right? And that was the very first one. Ever since then, they beat expectations on income. I don't know about revenue, but you can see usually if they beat on income or earnings, they beat on revenue as well. And it's more about subscribers than anything, right? You can see right here, they made a profit, but they lost, 3% less sales than expected. Maybe the number of subscribers went down or number of devices bought. So that's probably why that stock fell today. You can see down 22%, and it's green just because, it opened at this price and closed at this price. So on the day, it went up, but considering it fell from 144, it's still down, $30. Once a 400, almost $500 stock, now borderline 100. Right? Let's check year to date performance. Down 51%, just like Roblox. But this one has some more history behind it. I wouldn't say history, more like expectations, right? They know what to expect with Roku rather than Roblox at the moment. However, not so much because it is a $100 stock now, once 400. Everyone I knew in the Twitter tech arena had this stock around 300, 400, and they're down, 66% at least. So Roku, a lot of bag holders on this one. You can see from the very, very top down over 3/4, right? So the market cap has fallen 75%, which means 75% of the company's wealth is gone from the peak. Just put that into perspective. Now let's look at another one. Then we got one more. Oh, Carvana. This one is a online car service. You probably have heard of it, where they they pay really good for cars and they deliver cars to you. So it's all about cars, right? But it's just mixing internet retail with vehicles. Checking the year, once worth $377, now borderline 100. Not as bad as Roku, but looking at the year-to-date performance, we're seeing 230 down to 120, down 46% in the last month and a half. When a company loses half its value in a month and a half, it's generally not a good sign, obviously. But for these stocks, they've all been loved before, right? And now they're just getting slaughtered. So just watch out there. It's a tough market to make easy money, that's for sure. So watch out for Carvana, another one that is just kind of dicey, kind of risky. Of course, it's a growth stock, but not much value behind it, right? And then lastly, for today, we're going to look at PayPal. This stock has been slammed like no other. Just crazy for a company this size, right? Let's check out PayPal. You can see worth 120 billion from the very peak. PayPal is down right around 66%. So they lost 2/3 of the wealth that PayPal has had over time. The top, right? The very top. We can see COVID times PayPal was $85, right? 82. Now we are barely 100, right? 103. So we are up $23 from the COVID peak, which is just insane considering how much internet retail has gone through PayPal. Same with these other stocks, right? But yeah, let's check out the year-to-date performance. We see a 45% decline in the last month and a half. Stock has gone from 190 to 100. It's hard to watch, essentially. If I were you and you had money accessible, it's tough whether you want to put it to work or just continue to wait. At these prices for a whole bunch of growth stocks, I'd start averaging in slowly but surely, right? Let's look at the COVID crash, right? Let's compare what we're going through right now to COVID. You can see it's just up and down, but right now we're just getting more down action than anything. Even if you bought, 10 days early, you bought at 100, and PayPal later hit 300, you're still up 3 times, or 2 times, but you could just see, and you're getting a discount every other day, and you can buy more in. So yeah, just think of that as in consider just starting to average in rather than just putting all your money in at one time. That'll probably do better just because there is no end in sight, right? It's not like Monday is going to be 10% plus and everything's going to keep going up forever, right? Who knows when this will end? What do you even call this though, right? The tech crash, the comeback to reality crash, who knows? But yeah, something to look out for: Affirm, Roblox, Roku, Carvana, and PayPal. Watch out for these stocks. Add them to your watch list. Chart them and see where you can make some money. All right, I hope this video helps. Thanks for watching, and until next time.